Hello friends, we'll be understanding the treatment that is supposed to be done to a balance sheet when it comes to preparation of financial statements of not-for-profit organization. Now, when we speak about balance sheet treatments, there are not much things to discuss here because rest everything remains the same as preparation of balance sheet when it comes to partnership account, when it comes to profit for organization, when it comes to not-for-profit organization as well. However, there are certain things that we need to keep in mind whenever it comes to the preparation of balance sheet when it prepares or when it is prepared for a not-for-profit organization. Now, what exactly are those is what we are going to discuss here. So, let's highlight the points that we have mentioned down here. Now, just like the balance sheet is prepared after the preparation of profit and loss, similar to here, this balance sheet is prepared after preparation of income and expenditure account. Simple reason, profit and loss statement gives you the profit or loss that is supposed to be either added into the capital fund or subtracted into the capital fund as per the description of profit or loss. Similar to that, whatever surplus or deficit you have or you have derived out of income and expenditure account, surplus will be either added to the capital fund, deficit will be subtracted from this. Hence, it is prepared after preparation of income and expenditure account. Hence, to prepare a flawless balance sheet, you need to have a flawless income and expenditure account as well. Now, what are we basically talking about? Capital fund. Basically, that means whatever excess of total assets over total outside liabilities. Total assets, this is your balance sheet basically, this is your liability side, this is your asset side. Total of assets when this is over and above the total outside liability. That means excluding the equity share capital, reserves and surplus, whatever is left is known as total outside liability. So whatever outside liability is there, if assets are overpowering this outside liability, then whatever balance is left is known as capital fund. So that is the capital fund. That means basically reserves and surplus, equity and preference share capital if they are mentioned in your organization, or rather if they are mentioned in your balance sheet or a part of balance sheet at all. Now, when we talk about capital fund of not-for-profit organization, what does that include? It includes legacies, it includes special donations, it includes entrance fees or admission fees, it includes accumulated surplus or reserves and surplus, etc., etc. So, because we are talking about not-for-profit organization which works on donations, which works on entrance and admission fees, which works on legacies, which works on any kind of income that is related to a specific fund or accumulated surplus, etc., etc. Hence, whatever this or whatever compromisation, or rather whatever comprises of all these things is known as capital fund here. When it comes to preparation of capital fund, for a regular organization, it will have equity share capital, it will have preference share capital, it will have reserves and surplus, and that will have the proprietary fund, or we can also call this as capital fund. Now, whatever surplus we have is added over the number of years. So, whatever surplus we have is added to the capital fund or the accumulated fund. Whatever deficit we have is subtracted out of that over the number of years. So, basically, surplus and deficit is derived out of the income and expenditure statement, and that surplus or deficit will be either added to the capital fund or will be either subtracted from the capital fund as and how the description of the company may be, or as and how the description of the question may be. So if it is surplus, add it; if it is deficit, subtracted. Now, this is the basic statement, or rather this is the basic steps that you have to follow whenever it is supposed to be related to the balance sheet preparation. Now, there is no other rocket science that you have to go through while preparation of balance sheet when it comes to not-for-profit organization. These are the only things that you have to understand. Now, the term legacies, the term short-term things, or rather when we talk about the legacies, subscriptions, accumulated fund, or we can talk about entrance fees, admission fees, there are certain adjustments that are related to that, which you'll understand in the next video when we discuss about the ad hoc concepts. But right now, when we discuss about this thing, you will have to only understand about surplus and deficit part that will be either added or subtracted here. Now, there is nothing else to discuss in this topic, and hence we're closing it here. So this is all what we had when we come to, or rather when we talk about balance sheet accounting treatment. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.